there are different cities in the area that have more restrictive rules you need to be aware of. So, for example, the city of Los Angeles, if they have a much more restrictive rent control called the Rent Stabilization Ordinance, or RSO. And if you're a local investor here, you know that that only applies to properties built in 1978 or earlier. So that makes it very difficult to operate on those buildings, but it creates inefficiencies that can be exploited.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Anthony Walker is the CEO and managing broker of Buckingham Investments, a Southern California investment brokerage that helps clients learn, plan, and invest in real estate. He has been investing since 2006 and owns about 150 multifamily units in the area. Anthony, welcome to the show.
Thank you. Great to be here.
Hey, man, the pleasure's mine. Anthony, there are 3 questions I ask every guest who comes on the show in 90 seconds or less. Can you tell me, where did you start, where are you now, and how did you get there?
Oh, yeah, great question. I started in business school, I guess, at the very beginning. I was working a corporate job almost 10 years in the insurance industry and realized that was never going to get me where I wanted to be from a lifestyle or finance perspective. So went to business school to figure out what kind of business I could work for myself, and took a real estate investing class there in the MBA program at Loyola Marymount here in the LA area. Great program, by the way. And just needed to figure out how to get in. I wanted to start buying buildings. It seemed like that was a great business model. You could, no need to learn how to code or make some invention, right? This is a centuries, millennia old business, I should say. So after committing to doing commercial real estate there, I got introduced to a 50, 60-year company called Buckingham Investments that I run now. Started as a client first, bought a first little duplex about 12 years ago, and have been scaling my portfolio up ever since then, refinancing, doing exchanges. I joined the company as an agent about 10 years ago, got my broker's license, opened our Torrance office, took the company over as CEO about 5 years ago, and all along the way, been slowly developing a portfolio of small and medium-sized buildings here in the LA area. Now we are a company of about 45 agents, 3 offices. We are the #1 buy-side brokerage company in the Long Beach and Ports submarket in CoStar here in LA. So we're the first stop for buyers looking to get started on a multifamily portfolio, and we use my experience to help people understand how to do that.
That's cool. Can you break down buy side versus sell side for our listeners?
Yeah, so a lot of brokers actually learn how to focus on building their business through getting listings. That's kind of the gold standard when you start as a broker. You're always taught, go meet sellers, try and convince them to sell. That's better business than working with buyers, because if you get a listing, it's almost a guaranteed paycheck. You can use the marketing materials for the listing to advertise your own services. Well, you know, our founder, Jack Buckingham, way back in the 1960s, realized that most brokerages give all the buyers to their junior people with no experience. And so buyers generally, the experience has been pretty bad. When you walk into your average commercial real estate brokerage company, you're working with new people, and generally they're only going to show you their own listings, or if they show you other people's listings, they're just not taking a very sophisticated approach to it in a lot of cases, obviously with some exceptions. So, you know, our company was started at the very beginning to help people have a more holistic approach and get great representation, whether you're on the buy side or the sell side. So a lot of clients start with us as a buyer. A lot of clients are buying their very first investment property with us, or their very first apartment building. And we've got all kinds of systems and educational materials and local research we do ourselves to help people really understand what they're doing before they're in a high pressure, hey, you need to buy this property type situation.
It sounds like, and I know this is probably a wrong analysis here, but it sounds like you guys have a way of onboarding clients maybe that don't have a deep bench of experience in the commercial real estate space.
Absolutely. Yeah, that's our specialty, is helping people get started, or maybe they've bought a couple buildings on their own and don't really know how to scale up, and they haven't taken, they never took a finance class in school, and they're just not taking a sophisticated kind of structural approach, or really have a strategy in mind. Right. So we'll help people write an investment plan, understand time value money, all that kind of stuff. Yeah, that's absolutely our specialty.
That's really cool. I mean, what you guys do is it's unique, I think, in that it's a blend of like a lot of what we do here on the investment side. Like one of my jobs is obviously to invest, to educate our investor base. It's to educate, just putting out loads of content. You don't normally find the brokerage firm out there going, hey, here's how you invest in real estate, and here's all the educational content. And oh, hey, here's also, by the way, our meetup, and then also we'll help you buy and help you write your investment plan. I mean, that's a pretty robust operation. Has it always been that way, or has this kind of been an iterative process for you?
It actually has always been that way. We've been operating that way since the 1960s. And I can't believe other brokerages haven't really done this. Everyone still just seems to focus on kind of going after transaction by transaction. And there's very few companies that do what we do. So there's some other brokerages that do great research, which is part of what we do, but not very many that do a lot of educational stuff. And it's great for people that want to actively invest. They want to go find the property, maybe manage it themselves, maybe not, go get the loan, but there's not good service for people that are looking to do that out there. And so it's still, 70 years later almost now fits a niche, believe it or not, that nobody else is really doing.
Man, I think that's super cool. Tell me this, how do you balance, because you're an active investor as well.
Yeah.
How do you balance putting your clients' needs ahead of your own? Because I think that'll be I'm just speaking personally. I mean, when a great deal comes across my desk, I'm not calling you, Anthony, about it. I'm like, well, shoot, man, that's I'm going to go work on this. So tell me, how do you balance that?
Yeah, totally. I mean, first of all, most of my investments are just personally for me. So with that being said, I don't have the ability to buy every good deal in the market. I wish I did, but I just don't. I can probably buy 2, maybe 3 a year.
Right.
Last year I bought 4, which was an exception. And you'd be surprised how many different people have a different criteria set that they're looking for in a building. Just because a building is a great deal for me doesn't mean that it's the right fit for another one of our investors. I tend to work on a little bit of the larger side purchases in our market versus a lot of our investors probably are not shopping in the same price range that I'm looking in. For the deals that we do syndicate here, those are also on the larger side too. And so generally we're not competing with most of our investors in that space, and that's deliberate. So I'm not out there buying 2 to 4 unit buildings. Me personally, I tend to buy 10, 12, 15 unit properties, 20 plus for the syndicated stuff. And it's pretty rare that there's really a conflict. That being said, as a broker, I want my clients to have a great experience. And so if somebody's ready to go or they're in an exchange, I can wait and I'll get the good deal over to the client. I'd way rather have a good relationship with them, a great reputation, get some more referrals out of a good experience on their side. And especially, if there's a time frame that they need to hit, there's always more deals for me. And I kind of know the long term of it. I'm not that focused on stealing every deal that I can, so it's worked out most of the time, and I really haven't run into conflict of interests a lot.
No, that makes a lot of sense, and I appreciate you breaking that down. I mean, when there, like you said, not every deal is for every investor. It's just like every passive investment isn't for every investor.
Yeah,
like everybody's got their own flavor of what works for them. You're in Southern California. You say there's opportunity for the people that are outside of your state. You guys have a bad rap. I mean, it's like everybody just says, "Hey, we'll invest everywhere except for drumroll California." What do you say to that?
Surprise, surprise. Yeah, it's funny how that's been just the soundbite over the last 5 to 7 years. And I get it. I mean, California, I think most of that stems from the legislative environment, the regulatory environment here. It is difficult to be a property owner in California. Not going to sugarcoat that. We have more tenant protection laws, more rent control type, laws to worry about here than probably anywhere else except for New York. And so you need to understand that to operate here. On the other hand, the reason that environment exists is also sort of a chicken and egg dilemma, right? They have to legislate here to protect tenants because it's so good to be a property owner that the free market alone would probably not deliver even results for residents. Now, obviously the best way to solve that is actually let us build our way out of the supply crisis that we have right now. And we're not doing a very good job of that. But barring that, this environment is more a symptom of what makes investing here work so well. If you unpack it at a much broader level, we've lost a little bit of population here in the LA over the last year. I know that's a favorite thing to point at, but it's somewhere around 100, 150,000 people, in a metro area with over 10 million.
Right.
That's not going to move the needle. And the people that we're losing are the people at the very bottom of the income spectrum, and the people that we're gaining are coming here for very high paying jobs. And so when you look at what we do have, we have a gross metropolitan economy that delivers over $1 trillion in gross metropolitan product a year. That's the third most productive in the entire world. And it's the second largest commercial real estate market, only after the New York area here. So there's obviously business being done and people are making money in LA. So the idea that everybody's leaving is just ridiculous to me. But you need to know what you're doing to operate here. And honestly, that supply constraint is what's going to just do you a ton of favors over the long run. You're going in, cap rate might be low, but over time, these properties, your rent growth is incredible here. You're almost never going to have issues with vacancy or leasing. There's always going to be demand for your units. And the fact that it's very difficult to add more supply, there's no extra land, makes it really good to be a long-term landlord here in Southern California. Although obviously you have to learn how to operate in this environment.
Well, yeah, that's it. I mean, it cuts both ways. And I think people
Right.
overlook that. It's like, wait, the very thing that creates such a favorable, if I could speak today, investing environment is the very thing that can make it very challenging. So learning how to navigate the nuances of that particular market, I think, is the trick there. Is there anything that comes to mind when I say that, when I say navigate the nuances of the market, that you're like, man, here's some things that if you were to invest in Southern California that I think you should absolutely know?
Absolutely. So you've got to understand local jurisdictional differences in rent control regulations. So the whole state of California is rent controlled now. That started at the beginning of 2020. And the statewide version of rent control is pretty vanilla. It's actually pretty easy to operate here, where that's all that you have. You can increase rents by 5% plus the change in CPI every year with a maximum of 10. So currently, with inflation running so hot, we can increase rents 10% right now, which is plenty. I don't know if I want to make an increase more than 10% anyway, without causing a whole bunch of vacancy. That goes hand in hand with just cause for eviction protections for tenants. You've got to have a reason to vacate a tenancy. You can't just give somebody a 60-day notice and get them out. But there are different cities in the area that have more restrictive rules you need to be aware of. So, for example, the city of Los Angeles, if you're in the city of Los Angeles, they have a much more restrictive rent control called the Rent Stabilization Ordinance, or RSO. And if you're a local investor here, you know that only applies to properties built in 1978 or earlier. So that makes it very difficult to operate on those buildings, but it creates inefficiencies that can be exploited, for lack of a better term, if you're an investor. If you really, have the capital and you know how to work with these tenants and you can roll your sleeves up, it's mostly cash for keys, but you can buy buildings with rents, 100% upside in rents and priced accordingly. And so if you think about it that way, yes, it's difficult to work in that sort of environment, but if you're really good at it, you can do really well. On the other hand, if you buy stuff in the 80s in LA, you don't have to deal with that, and you only have the statewide rent control to worry about. So it's really different. So understanding the differences there, and there's even county differences and all that kind of stuff, is really what's going to set it apart when you're considering investing here in the local area. And then the fact that our market is so varied. I've got the map behind us. On this map, you've got cap rates in the 1s and you've got cap rates in the 5s or even in the low 6s, depending on where you're looking. So within a 1-hour drive of where I am right now, you can have anything you want on the risk return spectrum, which makes it a great market to participate in as well.
That's really interesting, that you say, I mean, just the all the nuances, both from the city, from the county. I mean, you're going 1 to 6 in cap rates.
Yeah.
What is the easiest way, or the best way, maybe not the easiest, but what's the best way for an investor to educate themselves before they take that plunge?
Well, shameless plug time. You can give us a call. We specialize in helping people make sense of this morass here in the local area. Our company is called Buckingham Investments. We've got a ton of free educational materials online, whether it's our YouTube channel, our monthly seminars. We've got downloadable guides. We also just completed a graphical market research dashboard on our website. So you can drill in even by unit count, area, zip code. And this is just in Southern LA County that we have active right now, but we're flushing that out to make it larger. And you can see, okay, where are the cap rates in the ones and the twos, right? And where are the cap rates higher? And what corner of the market do you want to work in? So there's a lot that you can do to kind of understand that a little bit. Big differences in the metrics on the 2 to 4 unit properties versus the 5 and up. And of course, that's because of the financing differing so much between those two. But there are a lot of people transacting here. There's a lot of business being done. The idea that it's a ghost town here is just not true.
It's not true, and if you're looking to invest there, that might be a prime time to start looking in Southern California. Tell me this: what are some risks, I guess, that you see, in the market in general right now that people maybe are taking on that they could otherwise avoid?
Yeah, I mean, I think the big question on a lot of people's minds is affordability, for tenants. So we have interest rates rising aggressively. It's becoming more difficult for people to become first-time home buyers, which of course puts additional pressure on the renter market. Rents here are really high and continue to grow. So we've got to keep an eye on that and see what changes in the economy that seem to be happening daily right now, what sort of impact that has on renter affordability. It's definitely becoming more common for people to, get roommates, multi-generational households, stuff like that. And it's becoming a lot more difficult for people here to afford the rent. So you've got to keep an eye on that. I think in our area, the Class A stuff is tricky. You're top of the market rents on those type of products. B and C apartments are a little bit easier to work with. Other risks I would keep an eye out for, obviously our interest rate risk, but everybody's talking about that right now. Your average commercial real estate loan is going to reset in 3 or 5 years. So we have to think about where interest rates are going to be during that time and where we can get rents to, so that if it's modeled out, we're still going to be able to do okay with the properties that we own. But I don't think you've got any supply side risks whatsoever here. We can't really add it, to the extent that increasing interest rates affects demand. Maybe that will balance out our market a little bit. We just finished our second quarter research and it hasn't been reflected in the pricing metrics yet. We're just not seeing that. And I think multifamily is going to remain a really popular space to be in. So you have to kind of take what you're reading in the papers with a grain of salt. A lot of that I think is geared towards the single family marketplace. But this is definitely an environment where you've got to be a good operator. You got to be able to select tenants well. You got to be able to run your buildings.
Well, that's it. And there's somebody else I was speaking to earlier today, and the term he used was pocket economics or pocket economies. I think that's what he said, pocket economies. He goes, man, once you get to know your market, he goes, I don't really care what's going on the macro scale. I don't care what's being, blabbered across whatever your news channel of choice is about what the economy's doing. He's like, you got to know what's going on in your very local market, even down to the street by street. He goes, because it's those pocket economies that will determine the success or failure of your investment.
Absolutely. I think you can't emphasize specialization enough. And, that's something I'm personally totally on board with. I'm very specialized. My favorite market is Long Beach, which is a pretty small little market. And I know it block by block. Okay. I know exactly what I'm going to be able to get for rent. I know exactly what I want to do for renovation on a unit at this area versus another area. And I think, as the cycle kind of rolls over this time around, people are thinking it's going to look more like it did in 2007, 2008, right? That's what everybody expects. Systemic crisis, everything goes down 30 to 50%. There's going to be blood in the streets. It's going to be great. I don't think that's what's going to happen at all. I think, to your point, it's going to be very localized. So, where there was a lot of additional demand over the last year, maybe that's going to come back down. Some markets got superheated over the last 2 years in the pandemic. Some didn't. Ours, it kind of experienced the opposite, right? We had people moving out of large cities. Now they're getting comfortable moving back in. Our market's been a little more of a stable up into the right thing, where some of these other markets that were really overheated are coming back down faster. So I think, just like you said, to the extent you know your own local market, you're going to do really well.
That's awesome. Anthony, thank you for taking the time to come on the show today and really share with us your expertise there in the Southern California markets. I certainly enjoyed it. You've shared a lot of very valuable information with our listeners. If they want to get in touch with you or learn more about you, what is the best way to do that?
Absolutely. Check us out at buckinghaminvestments.com. All kinds of free stuff there to consume to your desires. And then I'm sure you can find me on LinkedIn. Anthony Walker, Buckingham Investments. There's lots of Anthony Walkers, but I think only one with Buckingham Investments. So feel free to shoot me a message or an email, and I'm always available.
Yep, and we'll certainly put all your contact info there in the show notes as well. Anthony, thank you again for your time. I do appreciate it.
Thank you.